Stop screwing around here. So on this Tuesday, a quick update before we get into the content like I like to do every Tuesday. Number one, we have trade war talk rhetoric still driving the market. We're weak last week and into this week because of it. China's also facing problems with the real estate sector. As Tom mentioned in the trading room, being over-levered with some of the real estate investors. Their stock market's down about 20%, which is, quote, bear market territory. But the rhetoric going back and forth on how much we're going to charge you on your goods keeps this market uncertain. Equity markets that are uncertain get and stay under pressure. That's number one. Oil markets were driven today by some supply news. Saudi Arabia was going to pump more in. The sanctions on, which made oil prices go down early, and then the sanctions on Iran is going to shock supply, which made oil prices rally. So these fundamental drivers are important to know, or else you're going to miss opportunity. A trade advisor Navarro yesterday late afternoon came in, something that was kind of bullish, and we rallied off of it around 2:30 Central. But these comments keep what could be like a slower, drifty summer market busy at times, so sharpen your tools and know how to catch it. There's enough content in this edge community to know how to trade news. Now, looking at the screen you're looking at now, last week we talked about the bias creator. You're ready in the ready, aim, fire moment. Your step one, whatever you want to call it. Step one and ready to me is the same thing. We did a step one series talking about other people's what gets you to sit up in your chair and create an opinion. That's it. And we created what you could call a cloud map of different, and it doesn't matter if it's big or small, doesn't make it more important or less, but these are your guys' bias creators. I started off with new news that comes through the market. Some people said any larger volume gets them to stand up or sit up. Sell by absorption in a thin spot below or above volume or value area. Bid offer, supply, demand. So all of these things are your opinions, and none of them are wrong at all. There might be wrong for someone who doesn't use it or understand it, right? But they're not wrong for the person that uses it as long as they're consistent. And that's the whole point of these sessions, last week, this week, and the next one that we do. So step two is what we want to go over today. And that is what's next. Aim. What's your aim in the ready, aim, fire process? I started things off with selling, no selling. What does that mean? That means selling comes in, but we don't sell off. That's when a red edge zone comes in and we can't go offer. And goes, in fact, I really like it when I am bullish and I see a red edge zone come in and it never went offer. Or it went offer, quickly came in, never goes offer again. So some aggressive selling, whether it's a big order, but I even like these edge zones as a visual, and the SOB can't go down. So selling, but no selling, right? Quick absorption. You define it different ways. That's the way I'll kick this cloud off. Now, I'd like everybody in here to have your aim. If you don't have one, you should. If you don't have one, come up with one. And after we get enough of them, I'll start typing them in and we'll go over it. Give guys a couple minutes to type it in. All right, let's restart. So if your fire and your aim are close, that's fine. There's nothing wrong with that. Some people might have three, some might have two. Sometimes you have three, sometimes you have two, but everyone needs more than one. You don't always have one all the time, or obviously you should have a number two. So let's start things off with acceptance below my line is from Mark. Acceptance below his line in the sand, whether it be value area high or low, and a counter rotation back to the line for entry. So acceptance at line in sand. What is it? Counter rotation. That's good. And we'll shrink this up. Again, the size doesn't mean it's less important. Although for Mark, it does mean that here. Just kidding. Established trend. Am I looking for a long trade or a short trade? Well, if you're looking for a long, I would agree with this. This might be your ready moment, but it could be an aim. After you're bullish, is there a trend established? That's the way I'd put it. And this is where this today helps. After you're bullish, is it an uptrend? Is there a trend in the direction of bias? Now, the trend might be the reason for your bias, but maybe not, because there's a lot of reasons to create a bias. So let's put that one down in there. That's the way I would advise that works. Another one is high volume along with high participation. And listen, just because this is somebody else's aim doesn't mean you should pay attention. You just be like, I like that one. This is a way to kind of formally collaborate. High volume along with high participation, either negative, positive, delta. Okay, so I'd write that up with high, and I like this one, volume with, let's say, high delta. So not just high volume and not just positive or negative delta, but both is the way I'd say that back to you. Good job, Christine. I like that one. On to Bruce from Indiana. Yes, they could spell and type in Indiana. Oh, maybe not. He says aim is the location, so I say thin spot, stacked area, center of balance, breakout. I like it. For him, the aim is the location. He's bullish. He's looking for a location to buy it. So location, i.e. thin spot. Good one, Bruce. Peter says, what was the question? Oh, that was from earlier. Dale, Arkansas Dale, trying to focus on two qualifiers. One being EZ level into a thin spot. Okay, I like that. Edge zone level that can't move the market in the direction. I like that. Well, that's one of mine. So I'll just put an EZ level into thin. Not bad for Arkansas. What are we trading? Oh, Carl, par for the course. Trucker Mike from Iowa, when he said, when at least three of ancillaries on two different time frames line up. Three different ancillaries, all right, on two different time frames line up and looking for B2B bars. I'm just going to put B2B bars. Pattern. On multiple markets. That fair to say? Good one. Not bad for Iowa, which is below average for Illinois. Ken from the UK. Because of Ken and his UK compatriots, we celebrate July 4th. Because they didn't know how to hide behind trees. Just joking, Ken. Lots of congestion, then a breakout. So he's bullish, looking for congestion and breakout in the direction you're bullish, right? I like this. Congestion, then breakout in direction of bias. This is good stuff. I like this. I like this cloud map and making fun of you guys. Dan from Washington, D.C. and asks, what's the question? Par for the course. Just joking, Dan. The question is aim. What's next? Last week we talked about what creates your bias. This week, what do you do then? Pullback or retracement. I like it. Simple. Looking for a pull back. Even Dan came back and didn't know the question. Now he does. He's looking for a shallow. I like that retracement. He qualified it a little bit more. Retracement. Again, a retracement in the direction of his bias or opinion. Texas Dave. The only Texan I know without cowboy boots. But he does have the big furry foam cowboy hat. He just doesn't trade with it because it gets in the way of his monitors. Large aggressive sellers or buyers pulsing into a thin spot below or above volume area. Large aggressive, I'm going to have to copy and paste this. In fact, that's what I did last week. Why aren't I doing it this week? Don't answer that. Large aggressive sellers or buyers pulsing into a thin spot below or above volume area. Nice one, Dave. All right. Chuck is just saying it's a good one. What someone else said. Peter, I like it. He likes to see a little sideways move, which is kind of like congestion, right, Peter? Get everybody else chopped up. That's the logic behind that. That was good. Peter's same last name is Hugh, although they don't act the same. Well, maybe they do. They don't have the same taste. So Stan says, ready. We got that one. Hey, this is a long one. And I'm not saying this is bad at all, but I got to copy and paste it and then read it out of there. Let's do that. This is a long one. So ready might be his head fake. Neutral, selling is weakened but not overpowered by the buying. His aim, this is what I'm interested in. Evaluate and wait for a bullish strength. After the spring, wait for a rotation. I didn't copy the whole thing. Let me copy the rest. Hold on. There we go. After the spring, wait for the rotation up with buying strength followed by a weak rotation down. The rotation down is weaker with smaller selling imbalances, and price either makes a high low compared to low of the spring, new spring. Fires enter a strong reversal from weak down rotation. Now, this isn't, I get the gist of it. I'd have to dig down into it, but it doesn't matter if we understand it. He does. And I can follow where it becomes pretty automatic for him. That's the word, automatic. Peter gives us an example, a PNF bar that has to finish so that we can see an attempt to absorb buyers or sellers. Another one says thin spot. Carl left. All right. Previous support resistance levels. So that's a good one. Now here's a good one. A B to B bar. Some others have mentioned this, but a B to B bar in an ancillary market. How many guys didn't know what the word ancillary meant before you met me? At least you, Mark. Consolidation, absorption on a higher time frame, then rotation back to a zone on a faster time frame. You know, I'm reading all this stuff and I'm impressed. Consolidation, absorption on a higher time frame, then a rotation back into a zone on a faster time frame. And remember, this is to qualify, or at least start the qualification process into your bias. Your bias was created. And you know what? If you have a shaky bias creator to work on step 2 or this AIM feature, flip a coin. I don't mean to trade real money with the flip of a coin, but I mean to practice. Take the anxiety of trying to decide which way the market's going to go and stack probabilities, and flip a coin. Heads, it's going to be bullish. Now I got to look for how to qualify long. Tails, going to be bearish. I got to look how to qualify short. And that's where the AIM or step 2 part of the progression happens. The problem with creating an opinion so often is that, number one, it has to be flexible to change because the market's changing its mind. It's changing its mind a lot on a short time frame and a little less on a medium time frame and a lot less, but still changing its mind on a longer time frame, right? So it's changing its mind. That's what makes a market a market. It's flexible. It's fluid. If you're not fluid, you'd be a bad reporter, right? Think of a reporter that's trying to give you information on a fluid story where we don't know the facts. So they can't go too far outside of what they're going to report, or they could have egg on their face. But they have to report something. They have to get some information. They have to start building the story out, stacking the probabilities, and then it becomes clearer with kind of an aim. So if you think about it that way, don't think that your opinion in your first step last week has to be set in stone, can't change, because then it becomes too personal. It becomes right and wrong, and nobody likes to be wrong, and everybody loves to be right. I always tell this story. It's like when you're in 3rd grade and you know the answer, you raise your hand and shift it in your chair because you want the world to know you're right. And when you're a 4th grader, 3rd grader, the world to you is your classroom. That's your world. We love the world to know that we're right. It makes us feel good, egotistically or not. So when you take that and you say, well, how do I make sure it's not an enemy of mine in these markets? You have to know when the transition, when you're wrong, not to be wrong for long, not to marry your opinion and move the hell on. If you're having trouble with that, flip a damn coin and work on your aim. And then circle back. Work on your aim. These are really good aims. None of them are wrong. Some might be wrong for you if you tried it and didn't understand it wasn't automatic. But if it's right for you, it's because you're consistent with it. Peter has been a good trader, and I guarantee it's because he looks for this almost every time before he enters. He's disciplined not to make a trade without the aim feature. Anybody who's consistent is consistent without making a trade without every point of their progression filling out. That's what's important. It's all right to have an opinion, and as Mark said, you got to be good at letting go of your opinion. If I wasn't good at that, I couldn't host a room. I'm wrong a lot, but I'm not just wrong 10 points later. You guys know that if you're listening and following. But this is a cool cloud map that now is recorded and out there that you could add to. And if you're in this room and you don't, in this meeting, and you don't have one of these, you got to get one. You could copy one, you could come up with your own, but you got to articulate it. And if you didn't put, I would have got mad if only a few people popped in, but we got enough percentage of this room to say, okay, that's good. But I'm telling you, if I'm the senior trader, if I'm in charge of a group of people and they're sitting in this big conference and they know that they're supposed to come here with their aim and only X percent, not 100% have one, don't you think that person would get mad, right? the supervisor, the senior trader, the boss would say, wait a second, you're going to trade my money? And you guys aren't. You guys are all big boys and girls trading your own money. But if you weren't, you were in a prop firm, which is a professional environment. And they had said, come to this meeting with your aim. Let's talk about it. Let's get it out there. And you didn't have one. It's like, well, what do I hire this guy for? That doesn't mean you have to be trading real money or anything else. You could be on sim. But what I hire this guy for? Obviously, there's a ton of content to have good ready, aim, fire moments. But, and some of your aims might be your fire. I don't care. In a few weeks, we're going to talk about the fire moments, and then we're going to circle back and talk to Brad and go through his progression. And if you haven't listened to Brad's podcasts, to me, it's mandatory. Brad Jelnick, who's come on a few weeks ago, does podcasts. Google Brad Jelnick, A Trading Life, and it'll pull up the channels with his podcasts. Brad Jelnick, A Trading Life. You're crazy not to listen to his 1, 2, 5-minute clips. Go to it a few times a week, once a week. Put it on your calendar. You got to be patient. That's a word I just seen come across the chat. You got to be patient. But if you don't have structure, how the hell are you going to be patient? What are you going to be patient for? If you don't have nothing to be patient for, you're not going to be patient. Patience is key. Sometimes patience is trade right now. Well, he was patient, but he knew he didn't have much time. And other times it's like patience isn't always waiting. Sometimes it is. You got to know the difference. That's the trouble with just using the word patience as a solution, from a psychiatrist to a subject, right? To a patient. Well, you got to be patient. Well, wait a second. No, not always. Sometimes I got to be really patient. Other times I have no time to be patient. I got to rock and roll. I see the deer. I got a shot. I got to take it, or he's going to move. Or he's going to hear me. He's going to smell me. Other times there's nothing to shoot. What are you shooting at? I thought I seen a deer. Well, you thought you seen a deer. Even if you did, you didn't have a shot at him. So it happens. It happens a lot more often than taking the bad shot. You're not going to shoot at something you don't see, or you shouldn't if you're deer hunting. But oftentimes we trade on strategies, trades that aren't there. We wouldn't shoot at a deer we didn't see. Why are you making a trade at a trade that isn't there? Doesn't happen when you're shooting deer, but it does happen when you're trading. You got to have the magic word I was going to use, and Mark just said process. This is starting to build it out, to underscore it, to see what others are doing. So I'm going to be gone. I'll see Trading Room guys tomorrow and the rest of this week. I'm going to end the recording because this isn't relevant for people watching in the future. But the next Edge meeting, come with your fire moment.